Hey everybody, welcome to our August market update. We have some positive momentum in the market over the last few weeks. Craig, if you want to go over some of the stats on the real estate side.
Talk a little bit about what's happening in the real estate market over the summer. Right now we're looking at supply is about 25% below normal. That has been pretty much where we've been for quite a while.
Yeah.
So we're still trending that way. Demand's 26% below normal. But again, that seasonal summers in Phoenix are a little bit slower. We all know the luxury market pretty much disappears a lot during the summer as well. So that's standard. Closed sales, we had 4,934 sales in July closed, which is that's up a little bit over the summer.
That's
and
good.
A little bit less than the previous year over year, but still good. 33 days on market at contract. So that's pretty good. That's above where we've been in the past couple months. So good stats there. Summer has been busy, and the market's trending well.
Yeah, and I think if you just kind of think about the supply being low, demand being a little bit lower than normal,
Right.
that leads to more balance in the market.
The market is definitely very balanced. We're moving into balanced territory throughout the valley right now.
Yep.
Still some cities in the seller side and some in buyer, but I think we're really seeing a balanced market here.
Yeah, and we're still seeing a lot of seller concessions. I think it's the most that we've probably ever seen. I think it's over 50% of transactions have seller concessions.
Because we were down about 40 something, right?
Yeah.
So that's a lot.
It's a lot, and it's well above a normal market. And I know rates are the hot topic right now. I had 20 people text me over the weekend. It's August.
Why is that?
It's August 5th today. So we've seen a lot of data come in over the last few weeks that is positively shifting rates. A lot of that is due to the jobs. The job market has gotten tight. It's gotten squeezed. Not as many job openings, not as many job creations, which is a sign that the market's slowing down a bit. On top of that, unemployment rate went up. Most of the Fed members were anticipating us ending the year at a 4.1% unemployment rate. It jumped up to 4.3%.
Yeah.
So that's a huge jump in the span of a month. And one of the key things that the Fed's looking at is obviously that jobs portion. On top of that, they're looking at inflation, which inflation is still subsiding. Inflation's coming down. So they're those two pieces that they're looking at. And I think with the recent jobs data that's come in, it's pointing towards a Fed cut in September. Now, we've been anticipating that for a while, but we're now anticipating 88% of the time, or 88% favorable towards a 50 basis point rate cut instead of a 25 basis point rate cut. Now, what's super important, and we were talking about this offline a little bit, is that the market's already building that in. So it's already anticipating that the Fed's going to cut by 50 basis points in their September meeting. That's why we've seen this positive momentum shift in interest rates as of Thursday, Friday. So if you're waiting on the sidelines for the Fed to cut rates in September, you could be out the 2 to 3 months, and obviously tons of people are waiting on the sidelines for the Fed to cut.
A lot of people are, and that rate is the rate we're seeing today is already baked into that.
It's already baked into that future potential rate cut coming in September.
Yes.
So if you're waiting on the sidelines, I think it's super important that you realize that, because not many people are talking about that.
No.
And they're just hoping and praying, okay, well, rates are trending right around 6.5% today. What happens if the Fed cuts by 50 basis points in September? Are rates going to be in the fives? Probably not. No. And I think we saw that big shift over the last week due to the fact that we're seeing some favorable data for the Fed.
Favorable data, and also the Fed comments about a possible cut.
Yeah, exactly. And so I think it's super important to relay that message to as many people as possible. Buyers out there in the market right now, you're getting favorable conditions in a balanced market at lower interest rates than we've seen in over 12 months. So it is still a very opportune time. As I mentioned, almost 50% of contracts have seller concessions. So you can still negotiate seller concessions on top of the lower interest rate environment. Now, if this trend continues and more buyers jump back into the market, demand goes up, supply remains where it's at right now, it's going to be a lot tougher for first-time home buyers and move-up buyers to obtain homes if they're contingent or needing concessions.
Yes.
So I think now is a better time than ever to jump off of the sidelines.
Well, and the market's showing this. I mean, I had a $500,000 listing in Chandler recently, last weekend. We had tremendous amount of activity. We had 6 offers on one day. We went with an escalation clause well over ask with 1% concessions, but escalation clause drove the final price up quite a bit. But it felt like, I haven't seen that in a long time, right? That kind of activity. And I think in that price range, first-time home buyer, it's a very competitive market. So again, if you're waiting for rates to come down, we're already seeing rates down, it's going to drive that competition even harder. Yeah. Because 6 offers in one day in this market it's a lot.
That's crazy.
Yeah. And all my other, all the other listings are getting a lot of activity and they're selling.
Yeah.
So.
Yeah, I think in the media's obviously drives buyer sentiment.
Right.
Buyer sentiment is going to be really high in the next 2 to 3 weeks, just based on all of the headlines that we're seeing out there. Oh, rates are plummeting, rates are dropping.
Free fall.
Yeah, it's not free falling. Rates have come down a bit, and I think everyone's situation's different. Obviously, if it's not the right time to buy, it's not the right time to buy, and that's something that Craig and I will guide any client on. But it is a very good time in the market.
It really is. Yeah.
So if you have any questions for us, feel free to shoot us a DM, reach out, and have a great August, everyone.
Yep, have a good month.